Now let's look at illustration number 35. The lessee enters into a 10-year lease contract for 5,000 square meters of office space. The annual lease payments are rupees 50,000, which is payable at the end of each year. The interest rate implicit in lease cannot be readily determined. The lessee's incremental borrowing rate at the date of commencement was 6% per annum. At the beginning of year 6, so 5 years have passed by out of the total 10-year contract. At the beginning of year 6, the lessee and the lessor agree to amend the original lease to reduce the space to only 2,500 square meters. Alright, the original space was 5,000. At the beginning of year 6, the lessee and the lessor, they're coming together and they're saying that we will reduce the space to 2,500. Alright, so out of the original 5,000, 2,500 will be given up and the remaining 2,500 will actually be continued. All right. So the lessee and the lessor agree to amend the original lease space to only 2,500 square meters of the original space starting from the end of first quarter of year 6. Starting from the end of the first quarter of year 6, they're only going to have 2,500 square meters. The annual fixed lease payments to be made at the end of year from year 6 to year 10 are going to be 30,000. Obviously, if you're reducing the space, your amount won't be constant. Your amount won't be constant at 50,000. They have revised the lease payment to 30,000. Although, if you notice, for 5,000 square meters, it was 50,000. For 2,500, it's not 25,000. They renegotiated it at 30,000 rupees. All right, they renegotiated it at 30,000. The lessee's incremental borrowing rate at the beginning of year 6 is 5% per annum. All right, it was 6% initially at the date of commencement. Now it is 5% per annum. How should the modification be accounted for in the books of lessee? Now, this is a case where there's a decrease in the scope of lease. All right, the scope of assets under lease was 5,000 square meters earlier. Now it has come down to 2,500 square meters. So this is a case of decrease in scope of lease. All right, remember, decrease in lease term and decrease in the scope of lease, decrease in lease term and decrease in the scope of lease, both of them actually have the same accounting. All right, where the lease term reduces or where the scope of lease reduces, both of them are actually having the same accounting that we are actually going to see through illustration number 35. All right, let's start solving it. So similar to the previous illustration, we'll start by calculating lease liability as at the date of commencement. Lease liability as at the date of commencement of lease. The lease was for a total period of 10 years. Therefore, we have years as 1 to 10. All right. We'll have years as 1 to 10. We have cash flow of 50,000 per annum. All right. Remember, the question mentioned that the lease payment was actually 50,000 per annum. We have present value factor at 6%. 6% was the incremental borrowing rate on the date of commencement. The annuity factor for at 6% we calculated earlier, but I'm quickly calculating it again. It is equal to 7.3601 and I have a discounted cash flow. Discounted cash flow will be equal to 50,000 multiplied by 7.3601, which is equal to 3,68,005 rupees. All right, so we recognize an ROU asset and lease liability on the date of commencement of 3,68,005. It will be right of use asset debit 3,68,005, credit lease liability of 3,68,005 rupees. All right, so we have an ROU asset and lease liability of an amount of 3,68,000 on day one. Next, the question mentioned that at the beginning of year 6, 5 years have passed by. At the beginning of year 6, we are actually undertaking a modification. So let us actually calculate the carrying amount of ROU asset and the carrying amount of the lease liability at the beginning of year 6. All right, let's calculate the carrying amount of ROU asset and lease liability at beginning of year 6. ROU at beginning of year 6. Beginning of year 6 is also end of year 5. All right, it's also going to be the end of year 5. Now, ROU asset originally we recognize at 3,68,005. We recognize the ROU asset at 3,68,005. We would have charged the depreciation. We would have charged the depreciation of 3,68,005 divided by 10 years because 10 was the total lease term. All right, the depreciation per annum would have been 3,68,005 divided by 10. But because 5 years have passed by, I'm going to multiply it by 5 to calculate the depreciation for 5 years. And this is basically going to be equal to 1,84,200 2 rupees. All right. It's going to be 1,84,002.5 or 1,84,002. All right. So I have charged a depreciation of 368,005 divided by 10 multiplied by 5. All right. Depreciation per annum is going to be 36,800 multiplied by 5. You get the 5 years depreciation, and the carrying amount of the ROU asset at the beginning of year 6 is 1,84,002 rupees. Similar to carrying amount of ROU, I also need to calculate the carrying amount of the lease liability, for which I need to prepare the lease liability schedule. All right, so let's start preparing the lease liability schedule. So I have got years, I have then opening balance. We then have interest, which will be calculated at 6%. Interest is going to be calculated at the original discount rate of 6%. We then have payments, and we finally have closing balance. All right, so let's start plotting all these values. So for year one, the opening balance is basically nothing but the amount at which we recognize the ROU asset and lease liability, which is 3,68,005. All right. So for year one, I have the beginning balance as 3,68,005. I charge an interest at the rate of 6%. So that will be 368,005 multiplied by 6%, which is equal to 22,080. I'm skipping the decimals for the sake of convenience. All right. And then I have a payment of 50,000, which reduces my lease liability. So it will be 3,68,005 plus 22,080 less 50,000, which is 3,40,085. The closing balance for year one will become the beginning balance for year two. So beginning balance for year two is 3,40,085, and the interest for second year will be 3,40,085 multiplied by 6%, which will be 20,405. 340 multiplied by 6% is 20,405. I have a payment of 50,000 that I will reduce, and my closing balance will be 340,085 plus 20,405 less 50,000, which is equal to 3,10,490. For year 3, I have a beginning balance of 3,10,490. I then recognize interest at the rate of 6%, which will be 18,629. I then reduce my liability by 50,000 of payment that will happen at the end of year 3, and that will give me a liability of 310,490 plus 18,629 less 50,000, which is equal to 2,79,119. For year 4, my beginning balance will be 2,79,119. I have interest which is calculated at 16 at 6%, and that will give me 16,747 less payment of 50,000. That is going to be give me a closing liability of 2,45,866. For year 5, I have 2,45,866. I have interest which is calculated at 6%. That is going to be 14,752. I then have a lease payment of 50,000, which gives me a total lease liability of 245,866 plus 14,752 less 50,000, which is equal to 2,10,618. All right, so my closing lease liability at the end of year 5 is 2,10,618. All right, end of year 5 is nothing but beginning of year 6 as well. All right, end of year 5 is going to be beginning of year 6. So at the beginning of year 6, I have got a lease liability of 2,10,618. Let me just plot it. I have an ROU asset of rupees. I calculated the ROU asset carrying amount as 1,84,002. I'm writing it without decimal for the sake of convenience. 1,84,002, and I have a lease liability. I have got a lease liability of rupees 2,10,618. All right. So I've got 2,10,618. Both of them are at beginning of year 6. And beginning of year 6 is when I actually modify the lease contract as well. We enter into the modification also at the beginning of year 6. As part of the modification, what we did is we reduced the scope of assets under lease. We had 5,000 square meters of asset under lease. We have now reduced it or brought it down to 2,500. So we have actually reduced the scope of asset by 50%. All right, 5,000 has come down to 2,500. So I have reduced the scope of asset by 50%. All right, so percentage decrease in scope. I'm plotting down the percentage decrease in scope is equal to 50%. All right. So it came down from 5,000 to 2,500. Therefore, the decrease in scope is 50 percentage. There, since the scope of assets have reduced by 50 percentage, what Ind AS 116 requires us to do is reduce ROU asset and lease liability by 50 percentage. Reduce ROU asset and lease liability by 50 percentage. Reducing ROU asset basically means that we credit ROU asset. Reduction of lease liability means we debit lease liability. ROU asset we'll credit, lease liability is going to get debited. We will be debiting it by 50 percentage of the respective amounts. All right. So what we are going to do is we will debit lease liability. Lease liability will be debited, and the amount that it will be debited will be 2 lakh 10,618. 2,10,618 multiplied by the percentage decrease. 2,10,618 multiplied by the percentage decrease, which is multiplied by 50%. That is going to be 1,05,309. I then credit ROU asset. I'm crediting ROU asset. So to right of use asset, I am going to credit ROU asset by 50 percentage of 1,84,000. My ROU assets balance in the books of accounts is 184,002. Since the decrease in scope is 50 percentage, I am going to credit ROU asset by 184,002 multiplied by 50 percentage, which is equal to 92,001. All right. What the standard is saying is you calculate the carrying amounts at the beginning of year six. Since the percentage decrease in scope is 50 percentage, reduce lease liability by 50 percentage and reduce ROU asset also by 50 percentage of their respective carrying amounts. All right. Lease liability was being carried in the books of accounts at 210. Therefore, we are debiting 105, and ROU asset was being carried at 184. Therefore, we are crediting 92,000. We are reducing ROU asset by 92,000. But this journal entry is actually not tallying. For this journal entry to tally, we are going to actually have a balancing figure as a gain or loss on derecognition. We are going to have a gain or loss on derecognition, and we will be recognizing 105,309 less 92,001. We are going to have a gain of 13,308. All right, it's going to basically be a gain on derecognition because I'm having a credit. So credit basically represents a gain on derecognition of ROU asset and lease liability. All right, so we have recognized a gain of 13,308 rupees as a result of derecognition. Now, after this derecognition, the carrying amount of ROU asset, if you notice the carrying amount of ROU asset after derecognition, after 50% derecognition, will be equal to I had a balance of 184,002. I had a balance of 184,002. I reduced 92,000 from it. I reduced 92,001. Therefore, I will be left with a balance of 92,001 rupees after derecognition. All right, I'm going to be left with 92,001 rupees after derecognition. Same way, the carrying amount of the lease liability, the carrying amount of lease liability after 50% derecognition will be I had a balance of 210,618. I had a balance of 210,618. I derecognized 50% of it, which was 105,309. I have the remaining 105,309 left on my balance sheet. All right. So after the derecognition, the right of use asset will be 92,001 and 105,309 in case of lease liability. Are we done with the modification accounting? The answer is no, we are not done yet with the modification accounting. This was only part one to the modification. We also have part two. Now, under part two, we are going to actually calculate the revised lease liability like how we did in the previous illustrations. All right, we'll now calculate the revised lease liability. We're going to calculate the revised lease liability because the payments have actually now undergone a change. We now only have to pay 30,000 per annum for the next 5 years. We have to pay 30,000 per annum for the next 5 years, and we are going to use a revised discount rate of 5% per annum to calculate the revised lease liability. All right, so let's start calculating the revised lease liability. We are calculating the revised lease liability at beginning of year 6. We are standing at the beginning of year 6 and we are calculating the revised lease liability. We then have years which will be 1 to 5. Why is it 1 to 5? Because the total term was 10 years. Of that, 5 years have passed by. We're standing at the beginning of year 6. So the payments that we are going to make will be end of year 6, end of year 7, end of year 8, end of year 9, and end of 10th year. End of year 6 is basically 1 year away from today. All right, these are payments that are being made from year 6 to year 10. End of year 6 is 1 year away from today, and end of 10th year is 5 years away from today. Therefore, I've plotted 1 to 5. The cash flow now is going to be 30,000. I have present value factor that needs to be calculated at 5% because 5% is the revised discount rate. And then I have discounted cash flow. All right, the present value annuity factor at 5% is going to be equal to 4.3295. All right, so it's 4.3295. 4.3295 multiplied by 30,000 is going to be equal to 1,29,885. So my revised lease liability is going to be 1,29,885. I need to pay 30,000 for the next 5 years using a discount rate of 5%. The present value comes to 1,29,885. This is required to be my lease liability in the books of accounts. This should be my lease liability in the books of accounts as at the beginning of year 6. At the beginning of year 6, after modification, 129,885 should be my lease liability. What is the liability in my books of accounts? Is it 210,618? The answer is no. It's not 2,10,618. It is actually 1,05,309. All right, it's 1,05,309. Therefore, I need to increase the carrying amount of the lease liability in my books of accounts. All right, I need to have a liability of 129,885. I have a liability in my books of accounts of 105,309. I have a liability of 105,309 after 50% derecognition. Therefore, I now need to increase my liability. How much should I increase it by? I should be increasing it by 129 less 105. All right, so my increase in liability, the increase in lease liability is actually going to be equal to 129,885 less 105,309. 105,309. This is going to be equal to 24,576. So I have to increase my lease liability by 24,576. Correspondingly, I will also increase my right of use asset by the same value. All right. So therefore, the journal entry for this will be ROU asset debit of 24,576 and credit lease liability by 24,576. All right. So I'm increasing my ROU and increasing my lease liability. So in case of a decrease in the scope of lease, we are breaking it down into two parts. Part one is where we are derecognizing the existing ROU asset and existing lease liability. All right, because the scope has actually reduced by 50%, I reduce my lease liability and ROU asset by 50% of their corresponding carrying amounts, and then I recognize a gain or loss on derecognition. After that, I calculate my revised lease liability, compare the revised lease liability with the liability that exists in the books after derecognition, and any change will be recognized. I have an increase in lease liability of 24,000 over here. Correspondingly, I recognize right of use asset. This part is the same as what we saw in illustration 34 and 36. We calculate the revised lease liability and give a corresponding adjustment to the right of use asset. This part is the same as what we saw in illustration 34 and 36. All right, so we have ROU asset debit of 24,576 and lease liability credit of 24,576. All right, now after the modification, the carrying amount of ROU asset after modification. Earlier, we plotted the carrying amount of ROU asset after 50% derecognition. Now I'm plotting it after modification. I had a value of ROU asset after derecognition of 92,000. After derecognition, I had an ROU asset of 92,000. That increases 92,001 rupee increases by 24,576, and therefore my right of use asset will basically be 92,001 plus 24,576, that is equal to 1,16,577. I'm just quickly checking if that was 92,001. Yes, we had 92,001 as my carrying amount after derecognition that increases by 24,576, and therefore the carrying amount of the right of use asset after modification is 1,16,577. This will be depreciated over a period of 5 years. 5 years is the remaining lease term, and it is going to be depreciated over a period of 5 years. The carrying amount of lease liability, the carrying amount of lease liability after modification will be equal to, it will be exactly equal to the revised lease liability that we calculated of 129,885. It will be exactly equal to 129,885. It will be 105,309, which is the carrying amount that existed after derecognition. 105,309. I increase the lease liability also by 24,576. So when I increase it by 24,576, I will obviously end up with the revised lease liability amount of 129,885. All right. And then we have a revised lease liability schedule that will be prepared at 5%. This time interest will be at 5% because that is the discount rate that we actually used. All right. I'm not getting into the preparation of lease liability schedule, but ideally you will have a lease liability schedule for the remaining 5 years where interest will be calculated at 5% per annum. All right. So the ROU asset after modification will be 1,16,000 and lease liability will be 1,29,885. All right, so we have broken down the recognition or modification accounting into two. One is where we actually de-recognize existing ROU and existing lease liability and recognize any gain or loss as a result of de-recognition. How did we do that? We calculated 50% of the amount of ROU asset and lease liability, and we correspondingly had a balancing figure of gain or loss. The second part of modification accounting is where we actually calculate the revised lease liability based on the payments that we are expected to make, and then we actually compare that revised lease liability with the liability that we have in the books of accounts after the derecognition, and then we actually recognize an increase or decrease. Now you may have a thought, why did we actually get an increase over here? If you logically think of it, 50,000 was the amount that we were paying to the lessor before the modification. Ideally, if we had a corresponding exact similar decrease, we should have paid 25,000 after modification. 5,000 became 2,500. So therefore, 50,000 should have logically become 25,000. But over here, instead of paying 25,000, I'm paying a higher amount. I'm paying him 30,000. Therefore, I'm actually paying a higher value. And that higher amount or excess amount that I'm paying is actually coming out in the form of increase in lease liability. All right. If we would have ideally paid exactly the same, and if there was no change in the discount rate, all right, hypothetically assuming if we would have paid exactly 25,000 and if the discount rate was also 6%, the discount rate also did not change, then your discounted cash flow would have been exactly equal to 105,309 and no additional accounting would have been required. All right, if the cash flow would have been 25,000 and if the discount rate was 6%, then your discounted cash flow or your revised lease liability would have been exactly equal to the current lease liability and no additional accounting would have been required. But because over here cash flows and discount rate change, the revised lease liability is not equal to the current lease liability, and therefore we have an increase in this case, and we corresponding to the increase in lease liability, we correspondingly also increase the right of use asset. All right, so we then have a carrying amount of the right of use asset as 1,16,000 and the carrying amount of the lease liability after modification as 1,29,985 or 885. All right, so with that, we are done with illustration number 35. This is how we are actually going to account for the modification where there's a decrease in the scope of lease. All right, thank you.